So you're buying a property in Spain and you want to know how much a Spanish bank is going to lend you as a non-resident. You're not alone. There's so many questions out there. People want to know exactly how the process works. Today, we're joined by a top mortgage expert in Spain, and we're going to reveal all the details you need to know. If you're thinking of getting a mortgage in Spain, you need to watch this video. Right guys, we're back.
Thank you very much for the invite. It's a real pleasure to be here.
It's nice to have you on the channel.
Thank you very much, yeah.
So Marc, I wanted you to join us today because I want to talk mortgages. And I feel that for most of the audience out there, most people in the world don't know how advantageous it can be to get a mortgage and don't know what's possible.
Yeah.
Me, myself, like I think, you know, even if people are not actually looking to buy with a mortgage, I think buying in Spain with a mortgage is advantageous. So I want to dive into all the details. I know that you are one of the top experts in Spain.
Thank you.
So the first question, it's quite obvious, but I'll ask you, is can anyone get a mortgage in Spain for Spanish property?
The answer is more complex than yes or no, but in general, yes. Spanish banks are open to anyone as long as they have a good profile. So it doesn't matter where you're from in the world. You could be a Spanish resident, Spanish taxpayer, or you could be a taxpayer from another different country. The Spanish banks are open to talk to you and to consider a lending application to you. So that's a real positive.
So imagine, I mean, you know, within our agency, within High Homes, we have different kind of buyers, right? So we have buyers which are looking to relocate, right? We have buyers which are looking to buy a holiday home. And then we have a segment of buyers which are just looking to buy property as an investment. You know, they're going to use it a few times a year and then they're going to be renting it out, right?
Yeah.
Do Spanish banks like limit mortgages? So, you know, if you're doing any one of those, would they not lend to a specific profile, or do they not really look at this part of the...
Okay, so the first thing that any lender, anywhere in the world really, would want to understand what are the reasons for the purchase. You know, why are you interested in investing into a piece of property in Spain? And as you said, quite rightly, there's many different reasons. You know, client could be a job change. They could work in Switzerland, and their company may send them to Madrid or Costa, and they may look to buy a place as their main residence. They could buy a holiday home, or they could be just purely for investment. So any lender will need to understand what are the reasons for this. Why do they need to understand that? Because they need to understand the kind of length that you will have a relationship with that particular bank. So if it's a main residence, you're going to probably have a long-term relationship with a particular bank, which is quite attractive for a lender. But if you're a property investor and you may be looking at buying and selling, your relationship with that lender may be a lot shorter, and the bank would need to consider that. And so therefore there's many different factors, and we need to go into each individual circumstance before we can actually say, look, you know, this is the course of action that I think you should take. But yeah, in general, Spanish banks are open to all sorts of different scenarios.
So we've done, you know, various videos on the channel about, you know, buying in Spain, the cost of buying in Spain, the process of buying in Spain. I think one of the important questions for the audience is, you know, what do Spanish banks typically lend non-residents when buying a property in Spain?
That's a good question. The box standard average for a non-resident, it does depend on whereabouts in the world that you're from, what currency you earn. But you will see online that the maximum is 70%. 70% loan to value or loan to purchase. So very simple terms, 100,000 purchase price, your maximum mortgage would be 70,000 euros.
So let's put that on the screen. So a bank will lend you 70%, right? So a buyer, what you're saying is a buyer needs to be making a down payment of 30%?
Correct.
Plus the purchase cost?
Plus the purchase cost, yes.
So depending if it's a resale or a new construction, anywhere between 10 and 13.5 on top of that.
Yeah.
So that would mean that your down payment would be around the 40 to 43%, no?
Yeah, that's the maximum lending. Not everyone qualifies for that.
Okay, so, okay.
So a lot of people ring us saying, you know, they've seen online that 70% is the norm. We're here to sort of explain that isn't the norm. The actual average is slightly lower than that. Only the top profile applications will obtain 70%. And another thing that's really important, interest rates can be higher at 70% because it's the higher the risk. Now, the lower the risk, the lower the loan to value, generally you will have more lenders to go to because lenders feel more comfortable at that level and they're more competitive with rates. So, you know, I really want this message to get out there that yes, online you will see a lot everywhere saying 70%, 70%, but is 70% going to be the right thing for you?
Sure. So what you're saying is, maybe in the long term, it might be more interesting to get a lower interest rate at 60% and make more down payment, pay a stronger down payment at the beginning, and pay less interest rates at a higher 70%, if it's possible.
I'll give you an example, Kian. So if I offered you 70% at 4%, or I offered you 60% at 2.7%, which one are you going to go for?
You go for 2.5% any day of the week. Absolutely right.
Exactly. So this is why we need to be careful what we see online, and speak to an expert to really understand what's really beneficial for you.
Makes total sense.
Yeah.
Okay, so a question for you then. For those people in the audience which are contemplating buying a property in Spain, want to buy with a mortgage, and want to have a percentage which is most likely a percentage that Spanish banks will give you, what would they need to calculate with? What's the typical mortgage percentage LTV that you guys work with? Is 55% correct? 60%? What would be the average if 70% is hard to achieve?
Okay, so when we're having initial conversations with someone, we always like to be prudent when we're just to make sure we have wiggle room in order to maneuver or pivot if we need to. So we always have an initial conversation at 60%.
60%.
That's 10% lower than what the maximum is. And then dependent on how the conversation goes and we understand a bit more about the client profile, the backstory, then we would then start thinking about how we could maybe reach that 70%.
Okay, so let's talk about the next important sort of percentage, and it's interest rates. So we're filming this video in May 2025.
Yep.
Where are we today with interest rates for Spanish mortgages?
You can see my smile, right? So we're in a much better place than we were 2 years ago. And just a quick stat. So the ECB have cut rates 7 times within the last 10 months.
7 times?
Yeah, that's huge.
It's massive.
Just after the pandemic and the issues in Eastern Europe, interest rates went up really strongly, and now they come down again really strongly. So Euribor today is at 2.045, which is so good compared to where we were 12 months ago. If we compare Europe to Britain, the Bank of England just only recently cut rates last week, and that was the first cut they've ever done, and the Fed have held rates again. So we're much cheaper in terms of interest rates than we are in let's say the United States or in Great Britain, which is the majority of where our clients are coming from. So interest rates are absolutely fantastic in Europe right now. In Spain, Spanish banks are so competitive. They really are competitive between each other. It's great that they are.
They're great.
We're looking at rates between 2.2 for long-term fixed up to around about 4%, like I mentioned, at 70% loan to value.
2.2. Anyone that gets a 2.2, 2.5, hell, even 2.6% fixed, we're talking 30 years. So let me just put that into perspective, guys. We have a lot of clients from the US, right? Where, from all over the world, where they're used to, paying rates of, 5, 6%, being able to pin a bank down to committing to a fixed 2.5% or 2.6%, whatever it is, for 30 years, that's incredible.
That's amazing.
It's amazing. And especially with rampaging inflation through Europe, where money value is plummeting, I tell, our buyers or our investors, use the leverage of the bank. It's not expensive. It's not expensive.
And it makes good financial sense because let's say you can fix your payment, let's say 1,000 euros a month, and in 10 years it will still be 1,000 euros a month.
Yep.
That is a massive hedge against inflation, as you quite rightly said.
Totally right.
But your property value would have gone up. The rental,
Absolutely.
if you're going to rent it, would have gone up.
Yeah.
So it's a great investment, and you don't have to put all your money into the asset.
Totally. Totally. On that, this is super interesting. We had a client, it was last week actually, which we were discussing with you guys. So we had this one client that actually was coming to Spain with a investment budget of 1 million euros, right? and wanted to buy a property which he would be using, within 3-4 years, more time of the year, but in the first instance or the first years, he would use it maybe 3-4 weeks a year, and then he will rent it out the rest of the year, right? Short-term Airbnb. So it's sort of a mix of an investor and someone that wants to enjoy the property, right? So with 1 million euros, without really knowing his mortgage possibilities in Spain, we didn't really have that many options in the specific market we were looking at, which was Elviria, right? Yeah. And we sort of changed the game around a bit and told him, okay, let's look at it from a different angle. If I take your 1 million euros, right, and just put that aside for 1 second. Let's go out there and let's hunt for a property that needs some work. Mm-hmm. So we found a property that was for sale at 1.3 million euros, right, that needed around 200K of renovations, right? Yeah. Great capital appreciation potential. His down payment would only be around the 500,000 with a mortgage. The bank would mortgage the rest. Yeah. So he would just need to basically make a down payment of around 500,000 euros for the property and spend 200,000 euros on the renovation. He would not have to, in this case, he didn't have to use his entire sort of investment budget because he leveraged the bank. And I think that, it's a very smart thing to do when you're planning a long-term investment, something that you're going to be renting out for a few years. Things that, when it's a mix of capital appreciation and rental income, leveraging the bank is, in my opinion, a must.
Yeah, I mean, it's fantastic. I mean, again, I spoke to the client and we had a very productive conversation. So we went through options, we went through numbers. He's a savvy investor as well in his own country. He's bought and sold properties, used bank money. Yep. And when we went through the numbers and the interest rates that we're talking about, he's not going to buy without a mortgage now.
Yeah, well, it makes sense. I mean, come on, it makes no sense to buy without mortgage at that level. Especially
because he has a long-term plan as well, because he knows that cash is always good to keep liquid.
Absolutely.
And he's you've just done the figures there, so he's going to be in 700,000, 750, depending on how the reform goes. Mm-hmm. That means he's still got 250 left of his cash budget.
Exactly.
Which is music to his ears.
Absolutely.
And that's good advice.
Yeah, absolutely.
Right? That's actually good advice.
Absolutely.
And that was a very productive conversation, and it makes sense.
Going back to sort of the general conversation again, terms. So, we have buyers at different ages. What term could they expect to get from Spanish mortgages or from Spanish banks?
The majority of Spanish banks feel comfortable at 20 years.
Okay.
Now we can push them to 25. Mm-hmm. You mentioned 30 years. They have to be very, very young in order to get 30 years.
What's that like? In your 40s, in your 30s, in your
40,
40s, mid 40s.
Mid 40s. If you were a Spanish tax resident and you lived here as your home, you can get up to the 80. I think is the maximum age. But if you're non-resident, you're allowed to keep it a bit shorter. So between 20 and 25 years is generally prudent to do basic calculations on. And
okay.
once you apply to Spanish banks, you can try and push it then. You can push it to 30 years if it really is important to you to go that far.
The kind of mortgages we have in Spain are fixed mortgages and variable mortgages. Can we just touch on that? What are the main differences? How does that work?
Well, a variable rate is a floating rate. So depend on how the economy is and what the European Central Bank do with interest rates, your payment can go up or it can go down.
Yeah.
The benefit, now obviously a lot of people aren't that keen on variable rates because they like to know where they are and they like to know where they are on a monthly payments for a period of time. But one of the benefits of a variable rate is that there are no redemption penalties. So you can cancel a mortgage in full or in part at any time without being penalised for doing so. Now, Spanish mortgages are very regulated in Spain. The LCCI mortgage regulation is actually very much consumer-led, and there's a lot of consumer protection. Now, fixed rates in Spain, obviously, is that you fix the rate for a period of time. It could be 5 years, it could be 10 years, it could be for the full term of the mortgage. Now, in Spain, fixed rates are still great, even if you want that element of flexibility, because by law, the maximum that early redemption penalty that a bank can charge you is 2%.
It's still cheap.
It's still cheap.
That's still cheap. I mean, imagine you are a client. Okay, let's say you're in Poland, for example, and you're about to sell your business or sell your property, right? And you've got a good level of sort of, monthly income. You could essentially set up a 25-year mortgage term, right? And cancel it within 2 years by paying just 2% of the capital that's left,
Exactly,
right? Is that correct, right?
Yeah.
So to put that into numbers, if you have a 300,000 euros mortgage, it would cost you about 6K to cancel it 23 years before it's actually due. That's ridiculous.
That's really cheap. Now,
That's cheap.
I'm from the UK, so a fixed rate in the UK would normally last for 2, 3 years or 5 years, and the redemption penalty in the UK on a fixed rate is 5%.
No, it makes more sense. I mean, does it make more business sense? We shouldn't be speaking about it.
But this is the law.
If banks catch on to this, they might, change.
They can't because it's law.
Joking. Oh, fair enough. I didn't know that.
It's
oh,
law.
Really?
Yeah, so this is why understanding the law is actually quite important when you're giving advice to people, And
so it's capped.
It's capped. You cannot do it. You cannot charge more. Now, what's even more exciting, we can actually, I mean, if you call it exciting.
Yeah. It's exciting for me. Exciting for us.
But you can actually then, if you're a really good profile, you can actually negotiate a little bit better. And so if a client potentially says, look, Mark, I really don't like the 2%, I maybe want to throw some money into the mortgage, we can then negotiate with a particular bank an element of flexibility. So for example, you can negotiate 10% early redemption penalty free per annum. So in 10 years, if you pay 10%, you can be mortgage free. It's brilliant. So that's why Spanish banks are so good. Okay, so just to summarize, even if you're interested in a fixed rate, what the good thing is that a Spanish bank can offer, depending on your profile, the ability to make overpayments over the period of time without incurring that 2% fee. So, Spanish banks are really open to negotiate with potential clients, which is great.
I recently did a thread post, which was quite popular, and it was about mortgages. And I like to simplify things. Buying with a mortgage in Spain sounds super complicated, but if we just break it down, this is what it looks like. What does a mortgage really mean in Spain today, right? If you take out a mortgage, what does that look like monthly at a 2.8 interest over 30 years? 150,000 euro mortgage, 614 euros a month.
Yeah.
200,000 euro mortgage, 819. 300,000, 1,229. All the way up to 600,000, 2,500 a month. 900,000 euros mortgage is 3,689. If you break this down, for the investor segment of buyers, I just think it doesn't make any sense to not get mortgages nowadays. I want to know, Mark, how banks calculate if you are, let's say, eligible for a mortgage. So let's just make it easy numbers, right? My income in a year is 100,000 euros with my wife, right?
Is that gross or net?
Let's call it net, just for easy figures, right? Just to make it easy. So you have, after paying tax, you have 100,000 euros net, right? How do they calculate what I can afford and what I'm eligible for in mortgage terms? How does that work?
Okay, so the next question would be is that they say, okay, well, tell us about your credit commitments.
Okay, let's say my credit commitments in the US are 20,000 euros a year.
Okay, so you got to take that away, and those credit commitments would be mortgage. Would that be car loan?
Let's call them just for the sense of the conversation, mortgage loans.
Okay, basically, so you would have 80,000 euros a month as affordability. What they would then do is then calculate what the new Spanish mortgage would be, add that to your credit commitments. So instead, let's say it's an extra, 10,000 a year. So your credit commitments would be 30,000. And the simple calculation would be you divide your credit commitments, so in this case 30,000 a year against your income, which would be 100,000, and it's net income. Very important. This is a very important detail, not gross, net after taxation. And so that would work out to be a 30% debt to income ratio, which is absolutely fine.
So anything under 30. So if it's over the 30% mark, that's when banks will start wobbling. Is that correct?
Yes, 35% is the Goldilocks.
35%, okay.
Yeah, there are some banks that prefer 30, but then again, that's when a broker comes in. And there are some banks that can push it up to 40, dependent on your profile. Now, if your income was 500,000 a year, the debt to income ratio kind of goes out the window.
Why?
Because your capacity to pay is much higher than someone who earns 50,000 a year. Okay,
so banks go, okay, this, high earners, they measure high earners differently.
Completely.
Interesting.
It's kind of logical. If I have, after I paid all my bills, I've still got, 20,000, 25,000 a month, even my debt to income ratio could be 50%. I'm still,
Fair enough. Fair enough.
you know,
That's
fairly
interesting.
wealthy. Again, this is why understanding the intricacies and the nuances of the Spanish mortgage market is so important when you're trying to maneuver. You know, some banks are very Excel spreadsheet and algorithm centric. Maybe if you're high net worth, maybe you don't really want to be talking to those.
Fair enough. That's solid advice. So, Mark, if you had to give the audience one piece of advice, you know, for those which are just about to make the jump and coming to see properties and, you know, maybe thinking about buying a property, what would that piece of advice be?
Okay, so the message, the sole advice that I would give, and I have been giving for many, many years, is to understand how the money side of a property transaction in Spain works first before you head in or spend some time searching for properties. Getting what we call mortgage ready. It's a bit like beach ready, isn't it? You need to prepare. You need to prepare. You know, you need to train to get ready for that. That's the same thing with applying for a mortgage in Spain. Educate yourself. Understand what lending, if you require lending, will be available, and then do that homework first before you start your property search. It will make your journey and your investment much more pleasant.
Solid advice. Solid advice. I mean, you know, coming to market and then finding a property and not being able to pull the trigger on a property there's nothing worse.
Is the worst thing you could do. It's a big waste of time for the person who wants to buy, but it's a big waste of time for the vendor.
For everyone, absolutely.
You know, a vendor isn't going to take you seriously and take their property off the market unless you are mortgage ready.
So the advice is get mortgage ready before coming to market. Awesome.
Have to do it. Have to do it.
Right, so time for rapid fire. Okay. Are you ready for this?
I'm ready.
So rapid fire is what we do with all our guests on the channel, where we ask you one or the other, right? It can be items, things, and you to choose which one.
Right. Okay.
So Marc Elliott from Fluent Finance, are you ready?
I'm ready.
Quick fire. Okay, fast, yeah? Sunday roast or Sunday paella?
Sunday roast.
Tea and biscuits or chocolate con churros?
Chocolate con churros.
Ole. Real Madrid or Barcelona?
Real Madrid.
Tottenham or Arsenal?
Neither. None.
Beachfront penthouse or countryside mansion?
Beachfront penthouse.
Mortgage fixed rate or variable?
Fixed.
Nice. If you had to eat one Spanish dish every day, what would it be?
Tortilla de patata.
Ole, everyone, this is a common theme. Mark, thank you so much for being on the channel.
Thank you. Pleasure.
Right, guys, so that's a wrap. Before we go, I want to remind you guys, our audience that watching the channel, watching the video, if you thought this was interesting, we'd love to hear your comments, your feedback. Comment below. We read you and we answer every single one of you. So ask any questions you have for me or for Mark here, and we will get back to you. And if you are new to this space and it's the first time you come across our content, press that button. If you press the bell button, you'll be notified every time a cool video like this one comes up. And if you really want to stay posted with the best of the best, press that subscribe button and we will make sure to keep you guys posted with the best of the best. Until next time, hasta luego.